welcome to this edition of Pearls of Fisdom with Nirmal Bang. I'm Avan Dabash. Today, we put the spotlight then on the MSME space. Given that the Indian economy is inching towards $5 trillion and it's poised to be at the forefront of that story is the MSME growth story. Ugro is a company whose target segment, which is the MSMEs, is at the heart of its business model. It operates data tech, a lending platform, and aims to bridge the credit gap for small businesses in the country. The AUM has been growing at a scorching pace, and we want to understand a little bit more about the structural story, as well as the fact that analysts say that there's a compelling argument for their long-term potential success. So let's understand that. Suchindra Nath is the Vice Chairman and Managing Director of Ugro Capital and now joins us. Thank you so much for taking time out. I just want to start with a more holistic view then, given the fact that we have seen MSMEs really forming the core of the Indian economy with a variety of services and products. How is Ugro Capital addressing this MSME credit gap demand?
Yeah, let me start with the start itself. First and foremost, why is there is a credit gap? So all data shows that India's MSME credit gap is a staggering 90 lakh crore. 90 lakh crore, right? And it has moved from 65 lakh crore in 2017. In last, these 5-6 years, there has been a general trend or a narrative that MSME financing is important, which means every bank, every NBFC, small finance bank, everyone has been saying that they want to do MSME financing. But what makes it that it has just gap has ever increased? So 90 lakh crore gap, if you have to ever fulfill, the amount of capital needed in Indian financial sector is around 15 lakh crore, right? So that is such a large number. And of this gap, actually only one customer segment, which is what we call micro to small, which is in the trading band of or turnover band of 15 lakh to 15 crore constitute 90%. This gap has been for one primary reason is the lending institution are formal by nature and MSME have been informal. Let me contextualize this for you. Think of, most of your viewers will be much younger, but think of somebody wanting to buy a fridge, TV, scooter in 1995, and you go to a shop and you want to get financing. That financing would have taken at least 3-4 months. Today, you go to a Chroma or a store or you go to a dealer shop, you can get that financing within minutes. So this was also the case for consumer financing. Today, MSME financing prior to 2015, because if I were to give somebody a loan of 1 crore and if the EMI was 15 lakh rupees, 3 lakh rupees of EMI was coming from his formal source of income, 12 lakh rupees of EMI was coming from his informal or cash source of income. Now, for a lending institution to understand the repayment capability of a small business from his cash income was extremely difficult, and which means that they always relied on only collateral based lending. This started changing when first the demonetization happened, second when the GST got implemented, third when banking data got democratized, and fourth when the bureau started getting established. We call this is the Amrit Kal for MSME financing, because small businesses are getting more digital, getting more formal. For lending institution who can use data and technology to assess the cash flow of MSME would be able to fulfill some portion of this gap in this coming decade.
Okay, so that's interesting. But, given that your company, Ugro, is more tech loaded than most of the other fintechs, within the MSMEs, you've segregated a few sectors, and within that, they're tech-based sectors, really homogenize that and, support scale underwriting with low risk. This phygital, if I'm pronouncing it right, approach. How does that really help the company be well diversified geographically, product wise, and how are you capitalizing on the right place at the right time?
No, so let's understand and demystify what do we mean by we say we are a data tech company, right? So what is data? So generally for small business financing in India, you need three things for lending: the intent of the customer, his eligibility, and his ability to repay. The ability to repay was generally assessed physically. And that was also for consumer financing. Now you have something called bureau. If you have an X bureau score, every lender lends you within minutes because the bureau gives a certain element of what is your potential of default. Now, when this whole ecosystem, what we call India Stack 2, got established, when a customer has a GST turnover data, when a customer's banking I can access through account aggregation, when I can access his repayment behavior from the business bureau behavior, combine these three, machine can say yes and no at the
Hmm.
first go. And then after machine has said yes, then this goes to a credit underwriter who then underwrite basis the nuances of the customer itself. So it is the combination of the two, which means machine's ability to say yes and no to a customer, and then customer, depending upon the tenor of the loan, is getting decided and decision by a credit officer, is actually the heart of this. And this is where we say that the possibility of expanding to MSME credit now in India is, we say this MSME acha hai. So today we started a series with along with DNB saying, in 5 years back, if you go to a bank or you go to a large NBFC, say MSME, so saying MSME kharab hai because 10% ka NPA hota hai, 5-7% ka loss hota hai. And we say no, MSME acha hai because the fundamentals of small businesses have changed. There is a generational shift is happening. On top of that, in Ugro, what we have been able to do for our customer segment, this 15 lakh turnover to 15 crore turnover, through different channels, we service different needs of the customer in a manner that our total credit costs remain below 2%. So our customers are in different turnover bands. So suppose a customer which is in say 1 crore or 3 crore to 15 crore, he needs large ticket 2 and 3 crore rupees of loan. He has a collateral to offer. He sometimes needs a small business loan. So there is a separate channel which is intermediated. This is a customer which goes to every bank and NBFC. And our turnaround time is the main claim to fame. Then there is a micro enterprises channel which is very large in now 9 states, where our sales forces go to every small businesses and give a small ticket loan. We also have an equipment and machinery loan wherein the machinery is getting underwritten. We have a short tenor loan which is a 30 to 90-day retailer financing. So we do variety of product, variety of channel, so that we can build an institution in a scalable fashion for our customer segment. We genuinely believe that a company which started in 2018, which
Yeah.
suffered the credit crisis of ILFS and DHFL and Yes Bank, which then suffered the COVID pandemic for 1.5 years, but was able to scale itself to 9,000 odd crore in a span of 3 years, wherein the best of the lending institution, best of the investor, best of the co-lending partnership. Time has come. You are seeing emergence of multiple large institutions for MSME financing, and we are actually far ahead in that game, and hopefully we should be one of them, which creates a large institution around this itself.
Yeah. So what exactly is the expansion strategy on ground?
So, look, as I said, you can grow or expand more than 100% also in this business just because of the under penetration itself. So there is an unserved market and there is an underserved market. The underserved market is very, very large. But in lending business, you have to grow in a calibrated approach, because every time, irrespective how smart you are, how much you deploy towards data, how much you deploy towards technology, ultimate litmus test is our portfolio performance. And that's why you have to grow in a calibrated fashion. We grew extremely fast, starting from 2022 at 3,000 crore, to in 23 6,000 crore, now in 24 at 9,000 odd crore. And we have established all our channel, and we want to now grow where the need is highest and where we can also make good yield and a bottom line performance. So two channels of our micro enterprises business and our retailer financing and little higher yielding business is where we would grow. Today, we started in 2021. We went to 5 states. We started 25 location. Then we went, and in the same states, we expanded 50 location. We have now added another 75 location, and we have added 3 states: UP, MP, and Andhra, four actually, and Andhra and Maharashtra. And in next 8 to 10 quarters, we would be at a 400, 375 to 400 physical location, servicing the need of MSME customer. The beauty is, vis-a-vis some of our peers, if you may call so, that they only provide one type of loan, a secured, property led loan, versus for our customer, we can service multiple their needs. If a customer has come with, say, a 15 lakh rupees of credit need, but they want to expand and have a bigger collateral to offer, we can also give him 50 lakh rupees of loan. If a customer which is, want to do energy efficiency and want to implement a water plant, or want to implement a rooftop solar, we can do that. If there is an SME which is selling to a large FMCG company, we can discount his invoice. If a small business is there which want to purchase material, we can finance against the purchase order. So I think so that is the beauty, that we focus on the customer. We create an access and distribution reach, and then we are combining all of this together. So our biggest growth in next 2 years or so would
Yeah.
largely come from our micro enterprises business.
Okay. And your yields, that has, gone ahead and seen an improvement because of the share of the unsecured disbursements. Do you have the bandwidth to improve yields?
Yeah, so I think so. Look, no, our yield is going up just because as we mature, as we understand our customer segment well, we have an ability to underwrite our loan portfolio without taking disproportionate credit cost. So our business loan, which you call unsecured, because these are the loan which also comes with the credit guarantee of Government of India, which means 75% of these loans are guaranteed by the Government of India, because there is a massive push to provide MSME loan without collateral. That is at 30% of our portfolio and will remain at 30%. We will have an yield increase of roughly around in 8 to 10 quarters of around 100 to 125 or 150 basis point in the best case scenario. And it is happening because our incremental business growth is coming from micro enterprises, wherein not many players are there. The yield is at around 20 odd percent, and it's a secured business. So we have the potential of growing our yield while we now grow our asset. So our asset growth would probably not be at the same pace, but our yield and profitability would grow at a faster pace now.
Okay. I just want to understand, are there any pockets of concern when it comes to your loan book and how your credit costs are shaping up?
So our business is designed by channel, by product, and what we estimate the lifetime losses. So we do four types of channel. We do prime customer segment, prime secured, and prime business loan. In prime secured loan, we expect the lifetime GNPA to be the range of 2%, credit cost to be 0.5%. Business loan, gross NPA of around 5%, credit cost of annualized credit cost of 2% or 1.5%. Machinery, 0.25, micro enterprises 1, and we balance a percentage. So today micro enterprise loan is at 12%, would go to 20%, machinery would go to 15 odd percent, our business loan will remain static at 30. If you maintain this mix and if you remain in this band, we are at a credit cost of around 1.5%. We are designed to absorb up to 2% of credit cost. As our portfolio will mature, we'll get there, but simultaneously our yield would increase, our OPEX would come down, and cost of debt would come down. And that's why from a 2%, 2.5% ROA, we would get to a 4% ROA is our belief.
Okay. And given the fact that the unsecured product share in disbursements, that has remained the highest, is that any concern for you? Would you like to cap it?
No, ma'am, it's actually, so the way you look at the data, as of March 23, we disburse around 150 crore per month. And as of March 24, also we disburse around 150 crore per month. So volumes have remained static for our business loan, and it would remain static at that level itself. So it is not growing. You're looking base effect because of the size has disproportionately has grown. That's why it looks like that. But where we are, we look at business loan as a percentage of AUM. Our percentage of a business loan would always constitute between 30 to 35% of our total AUM. So because our total AUM is growing, so as the 30% is growing, and it would remain in that range.
Okay. Recently, there was a rating upgrade as well on the unsecured on your paper. Can you just tell us a little bit more as to what the implication of this is, and does it help improve the overall business model? What does it mean for Ugro?
So look, rating is an important constituent because our cost of borrowing is dependent upon the ratings. The way rating function in India, there are two types of players. There are independent companies like ours, and the company which are supported by a large shareholder or a capital provider, right? Who has an Indian promoter, so the rating there also take in account or factor in the parentage, because what the rating agency think, if something to happen to the business, the parent would infuse capital, and I don't know whether it's fair or unfair, but that is the way rating works. For companies like us, every rating upgrade is an endorsement that our business model is working right. An independent agency is, in most one of the difficult times right now where liquidity, RBI has raised concern, liquidity is little challenged. Banks are being told not to lend to NBFC. We have demonstrated that our resilience allows us to get upgraded right now. We were already rated A by India Rating, which is also one of the top rating agency, and we have moved in CRISIL from A minus to A. So right now it doesn't change much, except there is a there is a narrative value of that. But over a period of time, now we are in the trajectory of rating upgrade. As our maturity comes, as our portfolio grows, as we raise more equity capital, we think so we will be in next few years would be in the top category of rating, and that would reduce our cost of borrowing significantly. That has two effect. We would be able to transfer and make our loans more cheaper to for our customer, which means the customer retention becomes stronger, and also our margins would improve. So that's the net effect of that.
Understood. You have gone on record multiple times to talk about how you're very aspirational when it comes to the guidance for Ugro. There was an AUM target set of 10,000 crores for FY24, 16 to 18,000 crore rupees for FY25. I just want to understand what is driving this confidence.
So just the size of the opportunity and what we have been able to do now, I think so. In a market like India, if you don't stand and you say that you want to create an institution building is a function of putting a lot of pressure onto yourself. It's very difficult if you don't do that. So when we say what we want to achieve in next few years, it is more for us saying, look, there is a nine. What we are saying, we would like to be 1% market share of the outstanding credit, not the credit gap, is around 23 lakh crore. So 1% is 23,000 crore. Just think of it. Just 1% would give you that size. If you look at in consumer financing business, you have the market leader which has grown 47% CAGR for 15 years. So in every segment of the market, India is a country of an opportunity. We are at a time when everything is extremely going well. First time in our history, we have been able to decouple ourselves from the West, where their West is at war. There is war going between Russia and Ukraine. There is now war going between Israel and Iran. But India, in such global headwind scenario, remain very strong. So when that is happening, and for us not to say that here we are very capable set of people backed by very prominent sets of global investor and financial institution, that's what we want to do. We want to prove that there is a possibility to create another institution for a small business, which are the largest employment generator in our country.
Okay, good to know. And what is the outlook then, in terms of the fact that you have said that improvement on the profitability will largely be driven by the operating leverage playing out and the fact that credit costs will be remaining stable. Do you continue to maintain that?
Of course, we continue to maintain that. So I think so. Look, it is not a matter of choice, because as a listed company, people compare us with companies which have been in existence for 30 years, 45 years, right? Now sometimes when you sit, you feel that this is very unfair comparison. Why a company which is 3-year old is being compared to a company which is 45-year old with great parentage and all that. But then I put myself in the shoe of a public market investor. For him, it's a matter of choice whether he invest into us or he invest into a 40-50-year-old company, which means that on all account, if nothing else, we have to match to very established player. So if we are at a 2.5% of return on asset and a 9 to 10% return on equity, and if the largest player in the market which has been in existence for 40-50 years is at 4% return on asset, and says 15-16% of return of equity, I can't, take the defense of that we are young, right? If we are young, it's like Sachin Tendulkar at the age of 16 going into, Pakistan and hitting a century. Now he could have just got out at five runs and said, "Oh, but I'm very young, so why should you expect me to score?" But given you have gone into the Test cricket or you've gone into one day at young age, you are expected to perform at the level where established players were performing. So while we are young, it's okay, we will perform and hit centuries at our young age. Probably our energy and our skill allows us to do that better.
So I guess age is not just a number when it comes to your business. Now, recently there was that social media impact research report as well that was conducted with, of course, other industry majors. Give us some sort of a view as to what the outlook is when it comes to the borrowing mix, how people are availing credit, etc.
Yeah, so we come out with a impact report every year. Idea for that impact report is to tell people that MSME financing for a lot of people is just an economic activity. Our lenders look at that, they lend to us at an X price, and that's a good price or not good price. Equity investor only look at that whether they are making money, whether our share price going or not. But we always believe any business which has soul of itself, any business which is done with conscious, and any business which actually improves the life of the people is a good business, and eventually would make that business should stand out. Our impact report tells you that what we are delivering. When we deliver a credit to a small business, when we give somebody a loan of 15 lakh rupees, and that loan employs 10 more people, and that means that more people's family get created. When they go and buy a house, when they go and buy a scooter, fridge, TV, the kind of economic activity we create, right? When we lend to a female small entrepreneur in a tier 3 town, and the sheer independence she feels, which means that if she's a bahu in a house, now the sas and sassur can't can't say bad things to her just because she has an economic empowerment. The power of that is too strong. So our impact report actually demonstrate all of that parameter, that what we have been able to create. Think of this way: Ugro got created in 2018. It raised 1,000 crore of capital at that time, then raised another 340 crore of equity capital. Today it employs roughly around 2,800 people, which means 2,800 families it has supported. It has lent to almost 135,000 customer, and those customers have then employed another 500,000 people, which means that we have been able to generate employment and make roughly around 6 to 10 lakh people's life. That is very powerful, and that's what we want to demonstrate, saying it is a business with soul. Whatever we do, we are impacting people life at ground.
Wow, that's really touching to know, the personal side or the human side really of the business and how you're impacting lives and doing great things.
It
Given
doesn't mean,
that,
it doesn't mean
we want to get an
people should.
insight as well into whether or not you're looking at down the line there was some fundraising plans that you had undertaken, 250 crores from NCDs. Give us a sense as to what the outlook is in terms of your further fundraising plans. Is there anything on the anvil?
Yeah, so fundraising had two components, right? Fundraise. So raising debt is our bread and butter. We
Yeah.
borrow, we lend, and we earn a spread. So unlike a lot of fintech and new generation startup, when they combine equity and debt fundraise and they showcase as a fundraise, debt we don't consider as fundraise. That's our business, right? We do it in different form and shape. It's just a matter of fact that you grow in 3 years, have every domestic Indian bank as a lender, has large number of DFI as its lender, has raised money from public market, has raised money from private placement market, is one of the largest co-lending NBFC with partners with bank and lend to that. That's normal course of our business. But obviously we have a very robust profile of liability side. When it comes to the equity, which is also needed, because as you grow, you need more equity. I think so we raised capital in last year. We are still adequate capital to grow for another few quarters. And as and when we see market being appropriate, our idea is to raise now money not from private equity, but raise money from public market, and increase our public market profile. And first time we have started going and explaining our business to the public market investor. Whenever we think it's appropriate time, whenever we think the sentiment is good, we will raise more equity capital as well.
Okay. And, what is going to drive your net interest margin growth down the line?
I explained to you that given that we have now present in
Yeah.
75 physical location for micro enterprises, which is now becoming 150, and then continue to grow, and that because that incremental portfolio is coming at a higher yield of 20%, that would expand our NIM margin, and hopefully our operating, hopefully our vintage, and hopefully with a little bit of rating increase and the yield cycle reversing from last quarter of this year, our cost of borrowing should start coming down. So on one
Okay.
side, the portfolio yield increasing, and on the other side, the cost of borrowing coming down would increase our net interest margin.
And talk to us about the traction on the Growex app. How many customers have you tapped? How are you looking to leverage this?
So our Growex app actually was honestly the first credit on UPI. We felt that for small merchant shopkeepers in India, there is nobody to provide very small ticket lending, and that's why prior to credit on UPI being launched for the bank, we launched Growex app, which used unique tech integration, and we launched it. But after that, the regulation on credit on UPI came. Credit on UPI for NBFC has not yet been allowed, so we had to retune our app and make it not on credit on UPI, but little more conventional. But we have seen the great traction. Now, what we are trying to do is, because that's an untested market segment, we are trying to integrate our Growex app to multiple of our product offering. We are taking it to our existing customer. We are taking it to our retailer financing. Overall, if you think in next 3 years, if we were to add a million customer, we still believe that around uh, roughly around 10 to 15% of that would come through Growex app.
Okay. And finally, given that this is a series is called Pearls of Fisdom, do you have any pearls of wisdom that you would like to share just in terms of your journey, or one great piece of advice that you think that you would want to leave viewers with?
Look, I'm not qualified enough to give advice to people, but I can only say a professional
I would
turning
beg to differ.
but a professional turning an entrepreneur, I would say, and this I keep saying to our management team, that building businesses of your own is a tough journey. But
Yeah.
if you commit yourself, the joy of doing that and creating a name around that is very rewarding. So if any one of you want to enter into that domain, please have full conviction. But once you start that, unless you terribly fail, keep trying. I say everything. Please go and watch, 12th Fail and imbibe,
Yes.
restart. So till the time you don't succeed, please restart.
Oh my God, what an inspirational film that has been. And thank you for taking time out, Mr. Nath. Always a pleasure interacting with you. Thank you for giving us an outline and outlook on your business.
Thank you. Thank you so much.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.